Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for coming on today.
Good afternoon.
Well, let's start with Korea's biggest company, Samsung Electronics. For last year in total, Samsung is estimating that sales came to 279 trillion won. That's in the ballpark of $250 billion. Operating profit to be its third best on record and the best since the semiconductor supercycle peaked around 2018. And Samsung has not broken down this performance by sector, but it would appear that chips again led the way. How's Samsung doing, and what's your outlook?
Yes, despite the share price movement of Samsung Electronics was not that strong last year, in terms of the overall earnings number, it looks incredibly good. On this Friday, it is likely to post record quarterly sales in the first quarter of last year because of the semiconductor businesses. The company is expected to show sales to hit 76 trillion won in the September to December period, which is up 23.5% year on year. And also, if you look at the operating profit, it is likely to reach 13.8 trillion won, which is up 52.5%. If these numbers come to stand, then obviously it is one of the highest level of the quarterly numbers. And these things are actually happening on back of continuous semiconductor businesses doing well, and also the overall handset sales seems to be coming in at very good number, as well as the LCD and OLED operation seems to be doing reasonably well as the profits turns around. Because of this, we did see the share price movement of Samsung Electronics being quite positive today. Actually, overall market seems to be getting affected because of Samsung is the largest cap company within the KOSPI and KOSPI 200.
Right, and if we could now turn to the equity markets, overnight on Wall Street, stocks were down again, but a far smaller decline than the day before. The Dow took the bigger hit this time, and tech shares were less impacted. The futures are up right now, though. What's the story in the global markets?
Yes, I think that because of the possibility of tightening by Fed, clearly people are quite perturbed and concerned at the speed of the rate rising. We did see the 10-year government bond rate rising as high as 1.7% plus. Right now about 1.72, 73%. With the higher interest rate, we did see NASDAQ falling very sharply on Monday. The day before, and also today, we did see slightly declining by about 0.1%. Obviously, U.S. stocks continues to do a poor performance on back of this kind of concern that the rate is expected to further rise, and central bank is ready to remove the economic support, and the rating heights could be coming in much faster than expected, and then the Fed might be shrinking their balance sheets probably a lot faster than expected. But given the fact the economy is improving, and that if we see the claims for the jobless unemployment, which seems to see that the overall economy and the labor market is very quite robust. If that's the case, then the consumption numbers should be coming in at as good as what we saw towards the end of last year, where the record high level retail sales was happening. So all in all, I think people are concerned about the rate hike and the interest rate rise, which is negative for the equity market. While if you look at the economic numbers, higher labor, the wage growth, as well as the retail consumption, all that is a positive. So negative and positive are acting against each other, and that is causing the market to be fairly flat today on closing. Also, going into the future, I guess we do need to be very more cautious because of the higher interest rate environment. But all in all, if the economic numbers are coming in as better than expected, as we've seen, the December job report supports the economy recovery, then we think the market will be in a good position to rise in the future. But for the time being, right now, the second year of President in the power. If you look at the volatilities, most of times the first quarter to the third quarter, U.S. market tends to be fairly volatile, and this is the year of midterm election. So clearly that is causing the volatility as well. So a lot of factors are having effect on equity market of U.S. We think that the volatility in this market should continue for at least the first half of this year.
Well, today, as you mentioned, Korean stocks were significantly higher, and Samsung especially on its earnings estimate. The past three sessions, the Kospi had been lower, and so had Samsung. Another significant gain was for S-Oil. Tell us about the domestic market.
Right. If you look at the Kospi, finally it has shown some strength as of Friday. It did go up by 1.18%. This is all because now foreigners are coming back and they bought 635 billion won worth of Korean equities. And also Kosdaq is up about 1.5%. Also, foreign investors are buying about 59.2 billion, and also retail investors are buying about 24.3 billion. I think that it's all related to the currency movement as well as what's happening to the overall earnings growth of Korean companies. As we already talked about, we are seeing semiconductor business doing very well. That means that Samsung Electronics and SK Hynix, which are number one and number two market capitalization company within the Kospi or Kospi 200, they are showing a very strong earnings growth number, which means that semiconductor is in a good position to further rise in the future. And if you look at that semiconductor industry, the memory business is also very cyclical, and that demand and supply picture indicates that for this year, the supercycle should continue for year 2022. And on top of that, a lot of cyclical related stocks, which includes the S-Oils, oil energy related stocks, and also shipbuilding related stocks as well. All these are very cyclical, and given the fact the economy on a global scale should be reasonably doing well this year on back of very strong consumption numbers. If that's the case, then we do think that not just the semiconductor businesses, but other sectors, including automobile, shipbuilding, and energy-related, all should be doing reasonably well this year. So we think that year 2022 for Kospi should not be too worrisome. We did see market did not go up much. We were one of the lowest of rise in country amongst the OECD countries last year, but this year we should be probably on one of the top. Of course, what matters is what's happening to the foreign investors and also what's happening to the currency.
And as you say, the currency, we've seen the exchange rate steadily rising over the past year. If you look at a chart, the 52-week low was exactly 1 year ago today, and the 52-week high was yesterday. We've now crossed over 1,200 won to the dollar, meaning the won is down about 10% in that time. What's happening there? What's your outlook?
Yes. If you look at last 5 years trend, when we see the currency hitting around 1,200, usually that's a peak of the currency exchange rates. Usually when it hits the 1,200, then that peaks out and then tends to appreciate, and we start to see 1,100 numbers in front, which means that it's all related to the fundamentals. When you saw Fed might be tightening much faster and the U.S. interest rate rise faster, then people tend to buy dollars, and that results into weakness of Korean won versus dollars. However, the scale and the level of depreciation is not going to be that strong, given the fact that Korea continues to show very strong economic growth numbers. Of course, we are concerned about the consumer debt levels, but if you look at the government debt level and also overall current account surpluses, we did see slight trade deficit last December, but that should not be too worried. All in all, we do see that Korean won is not in a position to be further depreciating, but rather appreciating in the future. When currency start to depreciate even above 1,200, then that could be a quite troublesome, and that maybe Korean economy is under a massive problem. But based on our analysis, Korean economy seems to be quite resilient and strong, and therefore we don't expect the currency to be depreciating even further from the 1,200 territories, but rather it should appreciate, and maybe it might go down to as low as 1,150 territories over the next 1 year or so. And if you look at the U.S. dollar or so, given the fact that the U.S. having one of the highest level of government debt to GDP ratios, and the number just recently came out where the trade deficit hitting the record high level, we don't think that U.S. dollar is in any good position to further appreciate, rather depreciate slightly. And all that means that we think that Korean won should be stabilized in the future, and that means the foreign investor will be using that opportunity of weak currency as the time to purchase Korean equity, and that will have a trigger effect of the won appreciating in the future.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thank you as always for sharing your insights with us, and have a great weekend.
Thank you. You too.